G'day, Traders Mindset Reset, Tuesday, day 2, Free Cash Tuesday for several traders today. Some excellent opportunities. I'm going to answer some questions and I'm going to talk about 4 things at least, and hopefully that will answer some questions for traders and also explain my rationale. And I'm going to give you some insight into some things if you're struggling and if you're challenged with being consistent, or you're struggling to enter into the market or actually identify a best trade candidate. So number 1, indexes today. First red day yesterday. Number 1, beginning of a new month, new timing cycle. We've talked about this. There's videos on that on the playlist. And yesterday we had first red day on the indexes, days that broke higher and reversed into the close. Large days, great opportunities for traders. But we had them coiling today, coiling sideways, Asia, London, and breaking out into the London US window gap time. Now, these, if you haven't, we're going to talk about a couple things in a moment, but if you haven't traded that before, all that is now, this the London trader is in the first red day trade. High of day, high of session, shorting opportunity in a rectangular consolidation after first red day. So go back and look at your large dumping days. I've talked about short covering days coming after a large dump day. So they're typically the inside days that make higher highs and turns into a new day 1, day 2. It can be a parabolic reversal. But we had a rectangle and we had markets that broke outside of the Asian range and then through the low of the day. Now, a false break, again, we've talked about this, a false break will typically break a boundary and pull back inside. That's different than a range expansion that pokes the boundary and pulls back inside, similar to what we saw in gold, redraw the levels. But a false break will take traders outside of the market, coil, and reverse. And typically it will break down and make either lower lows or higher highs, depending on which side it's broken. So we have a day, it's in day 2. It's now in a breakout. It's a market in breakout heading into the 3rd session. And that's not everybody's cup of tea to be trading. But all that is for me is the range expansion now. We had 2 hours to major red news. So 3rd hour major red news, go back again and study that. When we have markets that are trading either in reversals or trend trades, they will often extend out until that 3rd hour news. And that's what really chops traders up sometimes, because they go to the 9:30 New York Open, they immediately trade the market or look for a counter trend, and that market will keep descending the range until that 3rd hour news. We've seen lots of situations on gold, on the indexes, where that 3rd hour news is actually the reversal or indeed the continuation, depending on the setup. But with first red day, they're already trending. It's breaking down. It's a weak market. They're dumping it. And so all that is for each pop-up, I'm just adding a position in, because I know we've got at least 90 minutes to the New York Open in second position, an hour. And then at the New York Open, they've pumped it up and coiled it. And I know there's people counter-trending that because retail loves to counter-trend, and I'm in a 3rd time for a parabolic blow-off. And that is where traders, again, next point that I'm going to talk about is specializing in the setups and templates that you want to trade and that you can easily recognize and execute. Now, my specialty, what I consider to be my forte, and I'm still adding a couple of other setups into this, is shorting opportunities that coincide with first red day setups, range expansions after first red days, not counter trending, but where the market is going to capitulate or fall. Like we saw a beautiful reversal today. My friend Steven in New Jersey, he's a reversal specialist. That had his name written all over it. As soon as I saw that setting up, I said to myself, I know Steven's hitting this trade today, because he likes to trade markets once they break out at the extremes in a reversal template setup. Now, if you look at gold, we had a little higher high in London, and I'll repeat this again in this video. If a market starts dumping down before the session begins from the inside, think pump. If New York Open occurs on the inside of a market that's breaking down and it coils, think pump. Now this is a different situation. Gold is inside the high and low still. It starts dumping down first hour, okay? Second hour begins the reversal, back up to the high of the day. Third hour begins, little 1 minute whip one way, 1 minute whip the other. Third minute, boom, explosion vertical. Now that's not the same as a news candle exploding on the release of the news. That is a breakout now that coiled and went 1, 2, 3 on the 1 minute. Redraw that level, okay? 30 to 45 minutes. They retest that high. 5 minute chart. Go and look at your 5 minute chart. 5 minutes, 10 minutes, 15 minutes at the high and an engulfment. 30 minutes into the third hour. News release was at 10 a.m. At 10:30, 10:31, 10:32, that market is already back inside on the smaller time frame, the 1 minute, inside of our universal EMA basic entry criteria for a parabolic reversal. Now, if you go back and look at that chart on gold, we had a slightly higher high in London. The low of the session in the US window is above closing price. There's a space there. That is the dead giveaway that they're going to go back through higher level longs. The explosion, the breakout explosion occurs at the high of the day. Dump and pump up into the news at the high of the year, the high of the month, the high of the week, the high of the day. Boom, breakout. Pull back, 1, 2, 3. Coil sideways. Engulfment. Slow collapse. Pull the bids out, and that market continued to fall all the way back to closing price. We may still see that roll over later, become a first red day. So, understanding the setups and the templates that you're trading. So one trader made a comment to me, "Oh, great, thanks for all your help," because he's pissed off for whatever reason. And my response is, there's lots of setups. Pick one setup that you know you're good at or that you want to trade. Now, I like to trade reversals on first red day setups. I like to trade shorting opportunities. That's what I like to do. And in a lot of cases, we'll see the escalator and the collapse, whether that's for a 50 pip stop on, a 30 pip stop on, a 100 pip drop on gold. But I understand, number one, when to sit on my hands. I understand, number two, when there is no setup on an instrument. So if you go look at EuroCAD, that's a classic, fantastic first green day setup. Now, first green day setup to me is a day that will end up closing as a first green day, because broke down on Friday, lower lows. Broke down again on Monday, lower lows. 2 days of breakout traders in the market from closing price, closing range of the week. Today broke down in Asia and London and reversed at the end of the London window, higher high, coiling sideways at closing price after breaking out of the low of the week. That is a template. That is a parabolic reversal template, a 3-day setup. So if you're getting irritated or frustrated, I challenge you to pick one type of setup. I went over this in the last 2 videos. First green day, first red day. Have a basket. Know what to look for. Think of it this way. If you could take 2 parabolic trades in a week. So here's my rationale. I'm going to get at least one on the indexes on a longer time frame, 15 minutes. I'm going to get at least one on a currency pair. And I'm going to get at least one on gold. There's 3 potential setups. Now, I've got other setups I'm going to look for on Free Cash Friday, specific setups on Free Cash Friday. But if I get 3, let's say I get 50 on gold, 50 on an index, and 25 on a currency, just hypothetical, that's 125 pips of parabolic best trade candidate setup. Now, when those markets coil, 100 pips of parabolic, profitable, coiled, explosive trade setups can double your account. No, you're not taking more leverage or more risk on any trade. It's the nature of the setup to explode or to collapse. 100 pips will double your account. if you understand and you know how to trade those setups. Now, if you don't have that skill set, be content to execute those trades, manage your risk, take profits until you develop that live performance skill set through repetition, through confidence, and through an understanding of what your best trade setup should trade like. How does it set up? Which instrument has that setup? How is price behaving? Is there major red news? Cross rate pair, Euro Canadian. I've said this, I'll repeat this again. If there's major US red news, the chances are that most US dollar major pairs are probably going to be reactive to that news. The cross rate pairs can be or offer an ideal candidate for a best trade setup. Now remember what I just said. One best trade candidate in the week on currency, on gold, parabolic, scalable, rinse and repeat opportunities, one on indexes. Now I'm going to tell you, we all know there's way more than 3. But most traders will keep trying to trade the movement, and they don't trade a parabolic setup. A parabolic setup. So I put up gold today, I put up Euro Canadian, the indexes. Now the indexes are slightly different, but that's the blow off in the third session on a first red day trade coming out of London. It's already broken out. It's in a range expansion now. I've covered that in previous videos. If you don't like that or you don't want to trade it, you don't have to. You don't have to trade that. You have not missed out on anything. That's what you have to understand. I love what my friend Steven in New Jersey, he specializes in one type of trade setup. And there's a very good reason for that. He knows what he's doing. Develop the expertise and the confidence in 1 or 2 setups and master those and be content to sit on your hands unless you see those set up. Make sure now you have the criteria and the daily routine and process to help you go through your charts quickly, skillfully, selectively to identify which pairs may be set up and then watch those to see how price behaves. There may only be one. There may only be one in your session. Day 1, day 2, day 3. So fantastic opportunities, but be content to sit on your hands and wait and know when your best trade candidate does show up, how you're going to trade it. Is it a sizable opportunity? Is it a scalp? Even with scalps, okay, let's say you can get 50 pips, 75 pips in a week of just scalable, rinse and repeat, zero stress, zero emotion trade setups, and you don't want to go too heavy with size, you're still compounding your account. That's the name of the game. Compound your account. Don't try to trade movement. Don't try to engage in impulsive behavior. Make money on the trade setups that you know will make you money. So I'll tell you what about the indexes in my experience. The reason why I know that was an easy trade to take today is because retail loves to counter trend. And I knew that going into that third-hour news release of the New York Open, they were still going to hit them again and again, and then possibly just chop and maybe not reverse. Look at your longer time frame chart on that template, Friday, Monday, Tuesday, and ask yourself this: why is there a reason for that market to all of a sudden explode and reverse on Tuesday, day 2? That is not a peak formation low. We haven't taken out the low of a week. We've taken out the low of a previous day, Monday's range, broken Fridays, or heading towards Fridays. Understand what a best trade candidate is. New month, new timing cycle. Okay? Pump day, first red day consolidation for a range expansion opportunity. So, in closing, real quick, congratulations to the traders that are with some easy money laying on the floor. If you didn't hit a trade today, don't worry about it, because there's going to be, this is Tuesday, there's 3 more days this week. And I said this last week, we could see some huge moves, new month, and a holiday weekend. Don't be surprised. Congratulations to the traders who are nailing these trades. And as I mentioned, be content to sit on your hands, master 1 or 2 templates. Know what the criteria is for those setups to occur and how price should behave once it starts to come together in your window. So important. Is it a nail and bail? I'm looking for my favorite trade setups. I'll say this in closing. My favorite trade setups are the DCBs, meaning they're not going to come back. Those don't come back on the day. So first red day trades yesterday on the indexes. Gold. Now gold dumped into the closing price level and consolidated. That's not a DCB. Take the money. But the markets that broke down and coiled, DCB. They're going into the close of the session. They're not going to recoil back at you. Okay? So understand what that means. There are opportunities where you can size in and they are not going to come back. They are not going to come back. As opposed to a session trade where it's still sizable. Still sizable. Gold yesterday, sizable opportunity, 200 pips in a market that broke out, coiled sideways. Remember what I said, train your eyes to move horizontally at the levels. Go look at the Euro Canadian, breakout, coil sideways, low of day, closing price, higher highs, explosion, back to the Monday's closing price level, I believe, Friday's closing price level. Monday expanded the range down, coiled sideways, exploded back. Parabolic opportunities will grow your trading account fast. You have to master the skill. You have to master yourself, your emotions, your patience. And as I said, think that you're only going to get one great trade on a group of instruments in the week. Maybe one on the indexes, one on gold, one on the currencies. Now, we all know there's more, but you only need to find one best trade setup out of that basket. Keep it simple. Focus on this. Keep your head in the game. And congratulations to the traders that are nailing it. Compound your account. Don't do anything to self-sabotage that. Keep it growing. Keep it growing. 1% better every single day, traders. Have a great day, and may the markets go with you.